Good day. This is the 17th video tutorial on Designer program. In today's lesson, we will analyze what stock indexes are and how to work with them. Index is an indicator of the securities market state. It is calculated in a specific way based on a basket of the most liquid common stocks or bonds. Stock indexes allow you to assess the market state as a whole to determine the current moment in the economic cycle. Indexes show the market movement direction. Thus, the change in the index value reflects the price behavior. Let's look at how you can build an index chart and determine a trading strategy based on comparison. To do this, download the market data of the Moscow Exchange Index. Enter the market data and download the index. It's called MOX. After the market data is downloaded, build a schema for displaying a candle chart on the screen for two instruments. Assign the first instrument of the Sberbank shares. The second instrument is the Moscow Exchange Index. Connect all the cubes. Click on Start. As you can see, two candle charts are built. The bottom chart is a chart of Sberbank shares, upper chart, index chart. This gap of charts occurred because of the different dimensions of the two instruments. In order to get more visual charts and compare them, it is necessary to enter the settings of the candle chart cube. Select the Y-axis item, open it. There is only one axis here, so add another. Then enter the candle item and open it. Select a chart and set a new Y-axis in the settings, after which the charts can be compared. So, we've got two charts that have different dimensions, but due to two different Y-axes, are comparable. You can see which chart belongs to a particular instrument by unchecking the checkboxes at the top of the chart window. Analyzing the possible profit, it is necessary to operate with the volume of the selected instrument commensurate with the indexes. It is now possible to assess the convergence and divergence of these charts. Set for yourself entry points to the market and exit points. Thus, create strategies based on indexes, calculate the possible loss and profit based on comparison. Also, when trading on the stock exchange, it becomes necessary to compare the course of trading a security and its futures. Let's look at how to build charts of Sberbank shares and its futures for comparison. To do this, enter the market data and download the SRM9 instrument. This is the June futures for Sberbank. Select an instrument and download it. Futures are actively traded in the market, so the use of this instrument is very common. Futures have a validity period and an active sale period. There are March, June, September, and December. Often, the end date is chosen on the 15th day of the month. For example, March ends on March 15th, and so on. After we download the selected instrument, we will build and compare charts. To do this, copy our schema and take it out to a new window. Specify the instrument in the variable cube, and click on Start. We have also built two charts. Again, comparing these charts, we can draw conclusions for the trading strategy. Analyzing the convergence of candle charts, the trader draws conclusions about the instrument state on the exchange. The futures have an expiration date, so there is a problem with the interruption on the chart. To build a continuous chart and compare it with a stock chart, you can use a composite instrument. To do this, go to the Hydra program and download the market data for March, June, and September futures. We select the instruments for downloading, where SRH is March, SRM is June, SRU is September futures, respectively. Select a time frame of 5 minutes. When choosing a period, it is important to specify the correct expiration date of the futures. The beginning of the period will specify the end date of the previous futures. Specify the market data storage and click on Start. Configure the network mode of the program. Now you need to create a composite instrument. To do this, enter the Instruments tab. At the bottom, click the plus button to create a new instrument. In the drop-down menu, select the composite instrument. In the window that opens, enter our instrument name, for example, Sber_CF at FORTS. After that, select the instrument on the basis of which our instrument will be built. To do this, click the plus button and select the futures we downloaded. It is very important to correctly set the end date of the futures for correct operation. After that, click on OK. For ease of working with the chart of obtained instrument, build a candle chart and save it. Later, when working with it, the Designer program will load the saved candles. This will save processing time. This procedure was considered by us in previous lessons. After building the candles, save them and go to the Designer program. In our schema, in the Instrument cube, specify the instrument we have created. In the Market Data section, we will specify the network storage for the possibility of building from ready-made candles. Set the path to the storage and click on Start. So, we've got a chart of our instrument, created on the basis of 3 futures. Thus, by combining the necessary data, you can create your own unique instruments. In the Designer program, the user can also create their own unique indexes they can use for strategies. Let's create a new window and look at how it can be done. In the Designer program, creating your own indexes is implemented using the Index cube. This cube has an output socket on which the result of the calculated index is generated. In the index setting, the mathematical formula for combining several instruments is set. For example, SBER TQBR/2. The division result will now be generated in the Index cube socket. Let's plot the index and the instrument to see clearly. To do this, we will create a simple schema and display the charts on the screen. After we run this schema, a chart of the instrument and index will be built in the chart window. Let's build a strategy with the following conditions. If the index, calculated by the formula SBER TQBR / SRM9 FORTS, is less than the average for 10 periods, then we sell Sber shares. If, on the contrary, the index value is greater than the average value over 10 periods, then we buy the June futures of Sberbank. To comply with the conditions and build a strategy, we will need to set an index. Calculate the average over 10 periods using the SMA indicator as an example, since it is calculated as an average. Find the current index value using the converter and comparison cubes. Compare the average value with it, and then signal the buy and sell cubes by connecting them with the candle cubes, depending on which condition is met. Select the variable cubes and assign the instrument type to them. In the properties of the first, set the Sberbank shares. In the second, we will set the value of the June stock futures. So, we have two instruments for trading. Select the index cube, and in the settings, write the SBER TQBR / SRM9 FORTS formula. That is, the index value will be equal to the ratio of the share price to the futures price. Thus, the strategy will be based on changing this ratio. Select the candles cube and connect it to the indicator cube. To get the index value, we will use the converter cube, which will get the value from the candles cube. Connect the cubes and set the index value in the converter properties when the candle is closed. To find the index average value over 10 periods, select the indicator cube and assign the SMA indicator in the settings. Set the number of periods to 10. This cube will now calculate the index average over 10 periods, and it can be compared with the current value. To compare the obtained index values, we will use two comparison cubes. Select cubes in the palette and set comparison signs. Set the less sign in the first cube. It will check if the index value is less than the average index value over 10 periods. Then it will send a signal. And the order registration cube will sell Sberbank shares. Select the order registration cube, set the trading directions to sell and the market price. Connect to the instrument cube, in the properties of which the Sberbank shares instrument is set, and with the comparison cube. Select two variable cubes and assign the order volume and portfolio for trading on them. Connect with the sale cube. Set the volume value to 1. Select the portfolio name, Simulator. So, if the current index value is less than the average index value over 10 periods, then the strategy will sell Sberbank shares at the market price. If, on the contrary, and the average index value over 10 periods is less than the index, then we buy futures. Set the condition sign in the comparison cube. Select Order Registration cube. Assign the market price and trade direction, Buy. Connect the cubes. So, if the index value is less than the average index value for 10 periods, then the strategy sells shares. If the index value is greater than the average index value over 10 periods, then the strategy buys futures. Assign a short period for clarity and set the network storage for the market data. To display the index chart, set the chart panel cube and connect it to the candles cube. We will see trades and orders in the Trades and Orders window. Let's start the strategy. So, we have an index chart. In the Trades window, you can see that the strategy is trading by buying and selling our assets. Also registers orders in accordance with our conditions. Thus, using the index cube, you can create your own instrument. By assigning the desired condition in its properties, you can track the instrument fluctuations. It is possible to trace the relationship between two or more instruments by setting the desired strategy behavior. This simplifies the work and makes the strategy more flexible and more reliable for working in the market. As a result, it increases the user's potential profit. So, we've considered at the previous schema how to work with the index. Now we can build an arbitrage strategy. The strategy meaning is that the same asset can be priced differently in different markets. Accordingly, buying it in the market where it costs less and selling it where it costs more. We can make a profit by playing on the price difference. With that, price fluctuations can be very short-term, thereby making a trading robot indispensable for trading. Reflection of price fluctuations can be traced by the change in the index, which is calculated as the ratio of the asset price in one market to the asset price in another. We will build our strategy by taking the Sberbank share as an asset, using two instruments. The first instrument is Sberbank shares. The second is Sberbank composite futures that we created earlier. By calculating the index that reflects the ratio of the share price for a more expensive instrument to a less expensive one, having determined the average index value for a specified period, we can set the required fluctuation size, thus setting the lower and upper limits of the index change. Based on this, we will set the direction of our strategy behavior. Since the asset value for the Sberbank shares instrument is slightly higher than the Sberbank futures value, then when the index grows and reaches the set limit, we sell Sberbank shares and buy futures, since the instrument of Sberbank shares is growing and futures are getting cheaper. Conversely, with a decrease in the index, the instrument of Sberbank shares becomes cheaper and Sberbank futures grows. Accordingly, we buy Sberbank shares and sell Sberbank futures. Since the dimension of the Sberbank futures lot is 100 times greater than the dimension of the Sberbank shares instrument lot, this must be taken into account when calculating the index and setting the dimension of the registered order volume. To calculate the index, we will need to find the closing prices for each instrument using the converter cube and using the formula cube to determine the price ratio size, thereby determining the index. Initially, we build a simple schema for determining candles. In each of the variable cubes, set the required instrument. For each instrument, you need to create your own candles cube to determine the closing price. Connect the cubes. In the first cube, specify the Sberbank shares instrument. In the second, we will specify the continuous futures of Sberbank. Now, let's see how the charts of our instruments look. For this, we will use the chart panel cube. We will use two cubes for clarity, since both instruments have different dimensions. As a source of market data, we will use network storage. For this, you need to run the Hydra program and enable network access. Click on Start. Above is the chart of the Sberbank shares instrument. Below is the chart of the Sberbank futures instrument. The data shows that the dimension of the Sberbank shares instrument is different from the dimension of the Sberbank futures instrument. In general, the fluctuations are about the same, so there will be no sharp jumps in the index. Let's remove the chart panel cubes, as we won't need them later. To determine the closing price, we will use the converter cube, which will receive it from the candles cube. For the correct strategy operation, we need to pass the closing price values to the variable cube. Since the prices are found sequentially, each of the values of the closing prices should be passed further along the schema, after a signal from one of the candles cube comes to the variable cube trigger when a new candle occurs. This allows to pass the corresponding price sizes to the formula cube. Select a variable cube. Connect it to the converter cube, and we connect the cube trigger with the candles cube. Similarly, we do with the second cube. Now, with each new candle, the price value stored in the cube will be passed further along the schema. As mentioned earlier, the share price for the Sberbank shares instrument is slightly higher than for the Sberbank futures instrument, and the lot size is 100 times less. Then, when calculating the index, we will consider this. For the calculation, use the formula cube. The index will be equal to the ratio of the closing price for the Sberbank shares instrument multiplied by 100 to the closing price of the Sberbank futures instrument. Write the formula, where A is the closing price for the Sberbank shares instrument, B the closing price of the Sberbank futures instrument. Connect the cubes. It is important to check the correct connection for the correct index calculation. Now, this cube calculates the index, and based on its fluctuations, you can set a condition for the trade direction. To find the average index value, use the building of the index chart. To do this, select the index cube and the candles cube and connect them. In order to display the index values curve, use the indicator cube. Set the name of the SMA indicator, which calculates the average value for the period. Set the period value to 1. Thereby, the average value will equal the current index value. Connect the indicator cube and the candles cube. And using the chart panel cube, build the index chart. To build a chart, we will also set the conditions for our index. Writing the calculation condition in the index cube settings. Now, run the strategy, and on the chart, we will determine the approximate average index value for the selected period. We've got a chart of our index for the set period. The essence of the arbitrage strategy in determining the direction of index fluctuations. In our case, we will manually assign the fluctuation size using variable cubes. Fluctuations will be determined based on the average index value for the period. We will determine the average index value from the chart by setting it equal to 1.0525. In our case, the strategy mechanism is as follows. If the current index value is 0.005 units higher than the average, the index grows accordingly. Then we sell the Sberbank shares instrument as it grows, and buy the Sberbank futures instrument, which is decreasing. If the current index value is 0.05 units below the average, the index falls accordingly. Then we buy the Sberbank shares instrument as it falls. And we sell the Sberbank futures instrument, which is growing. Thus, we are implementing an arbitrage strategy. To assign the limits of the index increase and decrease, use the variable cubes. Select two variable cubes. Set in the first value to 1.053. It will be the upper limit of the index fluctuation. Now, when the current index value reaches the limit of 1.053, that is, when the index increases, the strategy starts to sell the Sberbank shares instrument and buy Sberbank futures. Similarly, set the lower limit equal to 1.052. Now, when the current index value reaches the limit equal to 1.052, that is, when the index decreases, the strategy starts to buy the Sberbank shares instrument and sell Sberbank futures. For the strategy to work, we need to compare the current index value with the set limits. To do this, use comparison cubes. Connect the cubes and assign comparison conditions. Now, if the current index value is greater than the upper limit, the index increases. Select Order Registration Cubes. Set in their properties the trade direction. Now, if the index increases and its value exceeds the specified limit, then the strategy sells the Sberbank shares instrument and buys the Sberbank futures instrument. Connect the rest of the sockets. We set prices as the closing prices of instruments. Now, we set the portfolio for trading and 2 volumes of orders. First cube, portfolio cube. And 2 cubes of the volume of registered orders. Since the size of the instrument lots is different, for correct trading, it is necessary that the order volume in monetary equivalent be comparable, taking the volume of the futures instrument as a unit. The volume of the Sberbank shares instrument should be taken as 100, since the ratio of lots is 1 to 100. Once again, adjust the order volume cubes. It is very important to be careful for the correct strategy operation. Now the volume for the Sberbank shares instrument is 100, and for the Sberbank futures instrument is 1. Similarly, we make a branch at which the current index value decreases and becomes less than the lower limit. Also, select the order registration cubes and set connections. If the index is below the lower limit, therefore the index decreases. Then we sell the increasing Sberbank futures instrument and buy the decreasing Sberbank shares instrument. We set prices as the closing prices of instruments and connect portfolio and volume values cubes. Be careful when connecting links for the correct strategy operation. Now, if the current index value increases, then we buy a cheaper Sberbank futures instrument and sell a more expensive Sberbank shares instrument. And accordingly, when the index falls, we do the opposite. We buy the Sberbank shares instrument and sell the Sberbank futures instrument. Let's run the strategy. Strategy builds index chart. As you can see from the list of orders, the strategy trades by registering orders in the right direction and depending on the index change. It is also evident that the volume of orders for 2 instruments in monetary equivalent is comparable. Another important point in the arbitrage strategy is the correctness of the registered orders. That is, if one of the orders is not registered, then the second order opposite to it should not be registered. That is, in case of an error in registering one of the orders, the second one must be cancelled. Let's consider the order registration cube. At the output, the cube has 2 sockets, one of which is used to generate order data, and at the second, an error when registering an order. The order socket passes full data about the registered order. The order error socket passes error information. It is necessary to create such a schema so that when receiving a signal about an error from the order registration cube, opposite order was cancelled. To do this, take a variable cube. And pass it to the data about the registered order. We need to send a signal from the order error socket to the variable cube trigger from the order registration cube with the opposite trade direction. Now, when an error occurs on the opposite order, a signal is sent to the cube trigger about data passing to the order cancel cube. Select an order cancel cube and connect the variable cube that stores data of the order with the order cancel cube. Similarly, we do for the second order registration cube. Now, if an error occurs, the order registration cube will signal the orders cube to pass cancellation data. Thus, the correctness of the order registration will be regulated. That's all. Thanks. Goodbye.